Welcome, Stock Explorers listeners. Today we're plunging into the fascinating, high-stakes world of Rigetti Computing, ticker symbol RGTI. You might have seen the headlines about their, well, frankly, jaw-dropping achievement. A stunning 99.5% fidelity on their 36-qubit modular quantum system. So what we're doing right now is really cutting through the noise. We're going to unpack what this technical triumph truly signifies, and how Rigetti's unique approach reshapes the broader quantum computing landscape, and most importantly, what this all means for you as someone considering an investment in this revolutionary field. We'll lay out their business, dissect the tech, weigh the compelling positives against the, let's face it, formidable negatives, and pinpoint the critical milestones you absolutely need to watch. Think of this as your essential roadmap to understanding a pivotal player in a sector that could, well, redefine our future. Quantum computing has long been, a game of two halves. How many Qubits can you build and how good are they? For years, the focus was often on sheer numbers, but Rigetti just dropped a headline on July 16, 2025 that completely shifts that paradigm, achieving 99.5% median 2-qubit gate fidelity on their new 36-qubit system. This isn't just a technical win, it feels like a statement. Help me understand why this fidelity number specifically is such a big deal.
It really is. It underscores how, in quantum computing, the quality of operations, what we call fidelity, is often far more critical than just the raw count of qubits. Think of it like this. Having a super-fast car isn't much use if its steering is, broken. By nearly halving their gate error rate from their previous best on the 84-qubit Ankaa 3 system, Rigetti has effectively doubled the depth of quantum circuits you can reliably execute. This is a monumental step towards what we call fault-tolerant quantum computing, because many error-correcting codes require gate fidelities greater than 99% just to even begin to function. It's a threshold.
Okay, doubled the depth. But it still feels a bit counterintuitive, celebrating a 36-qubit system as an advancement over an 84-qubit one. My initial thought is always bigger is better in computing. So help me wrap my head around why this smaller system is actually a significant leap forward.
That's a great question, and it really gets to the heart of Rigetti's architectural bet. Unlike traditional monolithic chips where you try to pack everything onto one large piece, this new 36-qubit system is the industry's largest multi-chip quantum computer.
Multi-chip, okay.
Right. It's composed of 4 smaller 9-qubit chiplets tiled together. The 99.5% fidelity achievement on this specific architecture is, well, it's a resounding validation. It shows their proprietary modular technology can successfully link separate processing units without significantly degrading performance. It's effectively, as they say, unlocking their path to building a 100-plus qubit chiplet-based system down the line.
Yeah.
So it's about how you build it, not just the raw size of the current component.
Right, proving the connection works. So how does this 99.5% fidelity stack up against the competition then? We hear about IonQ claiming 99.9% with their trapped ions, IBM maybe around 99.6%, Google in a similar range with superconducting systems. How do we compare these? Apples to quantum oranges.
Exactly. Direct comparisons always require nuance. Rigetti's milestone is specifically noteworthy because, as we said, it was demonstrated on a multi-chip processor. That's a unique and significant engineering hurdle they've cleared. And furthermore, Rigetti consistently emphasizes its advantage in gate speeds. They claim their superconducting qubits perform operations more than 1,000 times faster than trapped ion systems.
1,000 times faster.
That's the claim. So this creates a critical trade-off for users. Do you want extremely fast gates with very good fidelity, which is Rigetti's pitch? Or are you willing to accept much slower operations for maybe a slightly higher fidelity, which some competitors offer? Each approach has its merits for different types of problems, really.
Okay, speed versus that last bit of fidelity. What does this mean for practical applications then? What types of computations become more feasible with this improved fidelity combined with that speed?
It definitely opens up a wider range of problems. This improved fidelity allows for deeper and wider quantum circuits, which are essential for complex tasks. Think quantum simulation and drug discovery modeling molecules more accurately. That needs depth. Or in financial modeling, like their collaboration with Moody's Analytics for recession forecasting. More precise calculations can make a huge difference there.
Right, Moody's. Interesting.
And certainly, more accurate quantum machine learning models, which require many, many gate operations, become far more viable. And this new system is even set to be publicly available via Rigetti's cloud services starting August 15th, 2025. So people can actually start using it soon.
August 15th. Okay, and just one more technical detail before we move on. They specifically reported median fidelity, not average. For us laypeople, why is that distinction important? Does it matter?
It does matter, yeah.
Yeah.
The median value means that at least 50% of the 2-qubit gates on the processor perform at or above 99.5% accuracy. This is generally a more robust statistic than an average, which could be skewed, pulled up by a few exceptionally high-performing qubits, potentially hiding problems elsewhere.
Ah, okay. So it's not just a few heroes carrying the team.
Exactly. However, it's worth noting it doesn't tell you anything about the performance of the bottom 50% of gates. For a truly complete picture, you'd ideally want to see the full distribution of performance across all gates. But median is a good start.
Got it. So this Fidelity breakthrough on a smaller modular system clearly validates their approach. Let's zoom out a bit then. How does this breakthrough fit into Rigetti's broader technological blueprint? You mentioned the chiplets, and they also talk about a full stack strategy.
Right, you've hit on their 2 core pillars. The chiplet strategy is really quite clever for manufacturing. Instead of trying to build one giant perfect chip, which gets exponentially harder and more expensive as it grows, they manufacture smaller, more manageable 9-qubit chiplets.
The 9-qubit ones.
Yeah, and then they tile them together. This approach dramatically increases manufacturing yield, it lowers costs, and frankly provides a much more predictable path to scaling. That 99.5% fidelity on the 36-qubit system is really compelling evidence that their proprietary interconnect technology is actually overcoming the primary challenge. Linking these modules without significant error. It's like building a large, complex machine out of proven, smaller, interconnected modules. Makes sense from an engineering perspective.
Okay, the modular build.
Yeah.
And what about this full stack approach? What advantages does that vertical integration provide? Because it sounds like they're doing a lot from the ground up.
They absolutely are. Rigetti controls every single layer of the quantum computing stack, from designing and fabricating their own chips at Fab 1, their in-house facility.
They make their own chips.
Yes. Right through to building the hardware control systems, and even developing their own software and cloud platform. This vertical integration creates a powerful, self-reinforcing feedback loop. Discoveries at the software level can immediately inform hardware design, allowing for incredibly rapid iteration and system-level optimization. And their deep access, what they call pulse-level control, via their QLT language, think of it as being able to fine-tune the exact quantum signals driving the qubits that really attract sophisticated researchers, which only accelerates innovation for them.
Pulse level control. Okay, so real deep access. Now, the ultimate holy grail for quantum computing is fault tolerance, right?
Right.
Where errors can be corrected faster than they appear. It sounds incredibly complex. How exactly is Rigetti pursuing this huge challenge?
Well, Rigetti's strategy for quantum error correction, or QEC, is deeply intertwined with their partnership with Riverlane. They're a leader in QEC software. And they've already demonstrated something significant together: real-time, low-latency quantum error correction on Rigetti's Anka 2 system. This is crucial because it proved that the classical decoder, the part that corrects the errors, can actually keep pace with Rigetti's incredibly fast gates.
Keeping up with the speed.
Exactly. Preventing what's known as a backlog problem, where errors pile up faster than you can fix them. That speed advantage comes back into play.
What's particularly interesting, though, is Rigetti's strategic choice of QEC code. They're using something called quantum low-density parity check codes, or QLDPC. How does this differ from, say, Google's surface code, which you hear about a lot? What's the significance of choosing QLDPC?
This really represents a strategic bet on efficiency. It's a big choice. While surface codes are robust and, widely studied, they require an extremely high number of physical qubits.
A lot of overhead.
A huge amount of overhead, yes. Just to create even a single usable, logical qubit that's error-corrected. QLDPC codes, on the other hand, are known for being far more efficient. They promise a similar level of error correction, but with a much lower physical-to-logical qubit ratio.
Fewer physical qubits needed for one good logical one.
Precisely. So what does that mean for Rigetti? It means they could potentially reach true fault tolerance with a smaller, less expensive processor. And that aligns perfectly with their modular chiplet strategy. It's a calculated risk, definitely, but with a potentially massive payoff in terms of scalability and cost.
Efficiency. Makes sense. Okay, for investors listening, what are the key catalysts and milestones on Rigetti's roadmap? What should they be watching closely in the coming months and years?
There are several critical ones, absolutely. The successful public launch of their new 36-qubit system on August 15th, 2025, that's the first immediate one. Does it perform as advertised for users? More significantly, you'll want to monitor their progress on the 100-plus qubit system, which they've slated for release by the end of 2025.
End of this year. That's soon.
It is ambitious. And specifically, the key question is, will it maintain or exceed that crucial 99.5% median 2-qubit gate fidelity at that scale? Scaling fidelity is hard. Beyond their own releases, look for results from the DARPA Quantum Benchmarking Initiative. That's independent validation. And outcomes from the Quantum Manufacturing Partnership, can they actually produce these chiplets reliably and affordably?
Right, manufacturing.
And finally, perhaps the biggest signal for the market. The first significant multi-year contract with a private sector enterprise for quantum computing as a service, QCIS. That would signal a pivotal shift towards genuine commercial viability, real money coming in.
That first big enterprise deal.
Got it.
And it's worth just hitting again on Rigetti's emphasis on gate speed. You mentioned it's over 1,000 times faster than some competitors. Why is this speed so important beyond just, making things happen quickly?
Yeah, it's fundamental. Quantum computation is basically a race against decoherence. Imagine a qubit as a spinning top. It needs to maintain its perfect spin, its quantum state, for a calculation to work. Decoherence is like that top starting to wobble and eventually falling over, losing its quantum state and any information it holds.
So it's unstable.
Inherently, yes. Faster gates mean Rigetti's qubits can complete more complex tricks, more operations, before they fall over or decohere. This enables deeper and more complex algorithms to actually run to completion. And it's also crucial, as we discussed, for practical hybrid quantum classical computing and that real-time error correction. Speed enables complexity and correction.
Okay, that makes the speed argument much clearer. So let's pull it all together. What does this all mean for someone considering an investment? Rigetti presents one of the most compelling, yet high-stakes investment dichotomies in emerging tech. It really is the poster child for high risk, high reward.
Absolutely. That sums it up perfectly. The company stands as a genuine pioneering force. But that technological promise is, inextricably linked with extreme financial risk. We're talking about a market valuation that is largely decoupled from current fundamentals. This is a pre-commercial entity with negligible and, frankly, declining revenues.
Declining revenue? Wow.
Yeah, substantial operating losses and a history of significant shareholder dilution. It exhibits all the classic characteristics of a highly speculative asset.
Okay, let's break that down, starting with the bull case. What are the foundational pillars suggesting Rigetti could be a long-term leader here? Why take the risk?
Well, first, that 99.5% fidelity milestone on a multi-chip processor is a massive proof of concept for their scaling strategy. It's huge technological validation. It's pillar one. Second, their full stack approach, especially with in-house fabrication at Fab 1, creates that very tight feedback loop for innovation. It's a distinct competitive advantage, that strategic differentiation. They control their destiny, so to speak.
Okay, tech validation, full stack control.
And third, capital. Following a recent $350 million equity offering, Rigetti has approximately $575 million in cash, and importantly, no debt. That provides a multi-year operational runway. Plus, those collaborations with DARPA, Riverlane, and Quantum Computer provide crucial external validation and support. So they have the money and some key partners.
That makes a compelling case for their vision and runway. But you mentioned formidable negatives. Let's flip to the bear case. What are the equally, if not more, powerful arguments against Rigetti? What keeps bears up at night?
Well, the starting point is almost always the stark financial reality. Rigetti is essentially pre-revenue, trailing 12-month revenue, only $9.21 million. And as you noted, it's declining.
Oh.
They are deeply unprofitable, over $73 million in operating losses. And management themselves explicitly state meaningful revenue is still maybe 3 to 5 years away. This high cash burn rate has led to massive shareholder dilution. Already shares outstanding increased tenfold since 2020. That's a huge red flag for existing investors.
Tenfold dilution.
Yeah. Every dollar burned means they must hit their next technical milestone on time or risk needing more cash, more dilution, or worse. The pressure is immense. Second major point for bears, intense competition. They're not alone in this race. They face deep-pocketed tech giants like Google and IBM. Those guys boast higher qubit counts. Currently, IBM's 1,121 qubit Condor, Google's 105 qubit Willow, and pure-play competitors like IonQ also claim higher 2-qubit gate fidelity, 99.9%, using a completely different trapped ion technology. There's a very real risk Rigetti could simply be out-innovated or outspent by these giants or other startups.
The David versus Goliath problem.
Absolutely. And third, the investment itself is characterized by extreme valuation and speculation, with a price-to-sales ratio exceeding 400x.
400x sales.
Yes. Rigetti's valuation is completely untethered from traditional metrics. The stock's price is heavily driven by news, hype, social media sentiment, It exhibits extreme volatility and has high short interest. Nearly 20% of the float is shorted. That makes it susceptible to pump and dump dynamics or wild short squeezes. It's a trader's playground, not necessarily a fundamental investor's dream. And bears also argue, reasonably, that 99.5% fidelity, while excellent progress, is still insufficient for true fault-tolerant quantum computing, which might require north of 99.9% or even higher. They might be celebrating too early.
Okay, that's a heavy bear case. Financials, competition, valuation, and the tech still needing to improve. So how does an investor even begin to assess the risks and valuation here? It feels like throwing darts sometimes.
It's incredibly difficult with traditional tools, you're right. The risks are immense. Let's just list them. There's significant technological risk. Failure to maintain fidelity as they scale to 100-plus qubits, or a competitor breakthrough, rendering their whole approach obsolete overnight. There's financial risk. Despite the current cash pile, future capital raises could lead to even further dilution if milestones are missed or delayed. Commercialization risk. The market for quantum computing might just develop much slower than anticipated, or customers might not be willing to pay significant money for current generation devices. Maybe classical computing is good enough for longer than we think?
The quantum winter scenario.
Potentially. Then there's market risk. As a highly speculative stock, it's extremely vulnerable to broader market downturns or shifts in sentiment away from high-growth tech. And finally, execution risk. Any failure to meet its own ambitious roadmap milestones would severely damage credibility and likely the stock price they have to deliver.
So it's like investing in the early days of biotech or even the internet, where you're betting on a future that's still largely unwritten and most players fail. But how do you even begin to value a company like this when it's burning cash to build that future? Traditional metrics are useless.
That's precisely the challenge and why it's so speculative. Current valuation multiples are, frankly, astronomical. That price-to-sales ratio over 400x tells you everything. Quantitative models, like Guru Focus's GF value, which tries to estimate intrinsic value, suggest a fair value of only maybe $0.80 per share.
80 cents, compared to what it trades at.
Exactly. It highlights the disconnect. But in stark contrast, you have Wall Street analysts issuing buy ratings with price targets in the $14 to $18 range. What does that tell you? They are effectively valuing Rigetti as a venture capital investment, not a public company based on current earnings or sales. They're saying the potential for a massive future payoff, if they succeed, justifies the present risk, even if a 100% loss is a very real possibility. An investment in Rigetti today is an explicit bet against traditional valuation methodologies. You're betting entirely on the future paradigm shift.
A VC bet in the public markets.
Okay.
Beyond the tech and the crazy financials, who is actually steering this ship? Is the leadership team and the governance structure inspire confidence given these incredibly high stakes?
That's a crucial piece of the puzzle, and something Rigetti seems to have focused on. Their leadership structure appears designed to blend deep technical expertise with seasoned public company and commercialization experience. The executive team includes Dr. Subodh Kulkarni as CEO. He has over 30 years in semiconductors and prior experience leading CyberOptics, a publicly traded tech company. He knows the public market game. And Jeffrey Bertelsen is the CFO. He was also with Dr. Kulkarni at CyberOptics. So there's existing chemistry there.
Experienced operators.
Yes. And the board of directors is also composed of individuals with extensive experience in corporate governance, technology, and finance. You see former executives from places like Hewlett-Packard and Applied Materials. This suggests a deliberate strategic effort to manage what is essentially a deep tech startup within the discipline and oversight required of the public markets. It's not just brilliant scientists running wild. It seems to be experienced business leaders, too.
Okay, that's somewhat reassuring. So wrapping this all up, Rigetti Computing really embodies this quintessential high-risk, high-reward nature of a truly disruptive technology investment. It is definitely, as you said, not for the faint of heart. It seems the company has successfully de-risked two critical areas lately. Its core technological thesis of modular scaling seems validated for now, and its near-term financial solvency looks okay thanks to that recent capital raise. So now the central question has fundamentally shifted from if it can survive the next year or two to if it can flawlessly execute its incredibly ambitious vision.
That's the perfect summary. For investors with a very high risk tolerance, and I mean very high, and a genuinely long-term horizon, think 5 to 10 years out minimum, a small speculative position in Rigetti could potentially be considered, but only as part of a well-diversified portfolio. You absolutely must be fully prepared for the possibility of a 100% loss on this one. Don't bet the farm. The key is to focus not on the daily wild price fluctuations, but on a tangible execution of its strategic roadmap. Look at the performance of that forthcoming 100-plus qubit system. Watch for those first significant commercial contracts. And constantly benchmark how its progress compares to key competitors. Those are the real indicators.
Right. Will Rigetti's unique blend of speed, modularity, and that efficient error correction bet be the winning formula in this thrilling race to true quantum advantage? Or will a different path, maybe higher fidelity ions or just massive scale from a giant, prove superior? That's the provocative thought we leave you with today. If you found this deep dive valuable, Stock Explorers listeners, please remember to subscribe, like, and activate notifications so you don't miss our next exploration into these cutting edge topics.